Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. Well, it is Monday and we got an interesting week ahead of us because we have a midweek holiday, a real midweek holiday. But we also have a lot of economic data to come. So, coming over here and looking at the markets right away, there's been a little bit of a move in the last 20, 30 minutes. I see here Uzi saying the market's going to be done moving by the time this stream starts. Sure looks like it. But we do have an ISM. So you know, let's come over and kind of do a little bit of analysis here. So, on Friday, we had a little bit of a jump here, followed by just like an absolute plunge. And, you know, the big news at 8 o'clock was, what was it? I don't even remember anymore. The consumer sentiment. Yeah, so we had consumer sentiment, and then ever after consumer sentiment, it was just down. I'm very skeptical that move was because of consumer sentiment, though. And in fact, the degree to which it moved makes me think that the Japanese are selling treasuries again. And maybe that's what's happening again. I don't know. But that has me a little bit antsy. Probably should have everybody in the market a little bit antsy. But here's the S&P 500. They also had a pretty wild sell-off. Now that was probably end of month flows because the S&P 500 just did so well. I don't know. The end of month flows should have been positive in treasuries, but it was like a big sell. It's just a big surprise. Okay, oil up a little bit higher overnight. Nothing too big of a deal. Gold and silver, you know, kind of still in the middle of their ranges here. And copper still struggling, but on the upside this morning. And then yeah, Japanese yen still kind of bouncing along the bottom. So I think that we should be on the lookout for intervention. All right. I think that they're selling treasuries. This is exactly what happened last time. Am I wrong? This is exactly what happened last time. Was the treasuries were just selling and we're like, this is a huge sell and we don't know where it's coming from. And it just kind of seemed to come out of nowhere. And then later they started intervening in the yen. So I think that they're selling some of their treasuries to raise funds for yen intervention. That's my theory. And then we got Bitcoin. Bitcoin taking a little bit of a jump on the 30th. Or nothing too big. Bitcoin kind of struggling. So, that's where we're at. Good morning, Octavius, Uzi, Robert, Jake, and Morgan. So, let's take a look first at the week that we got here, because this is kind of a weird week. All right. Not very often you get a week like this. So today we got ISM manufacturing PMIs. That's a pretty darned important number. All right. Then tomorrow, let's see, our Chair Powell is speaking at a panel discussion titled Policy Panel at the ECB Forum on Central Banking in Sintra. So that could be a relatively significant one. It's a panel discussion. Sometimes it's so if it's a panel discussion where there's a bunch of monetary policy people speaking, it might not be as big of a deal. And then let's see here. Wednesday, we're going to get ADP unemployment claims, ISM services PMIs, and the Fed meeting minutes. Oh man, this is a packed week. And again, no, that's weird that they're doing jolts on Tuesday instead of Wednesday, but maybe they decided there was too much stuff coming out on Wednesday, so they moved it to Tuesday. Because normally it would be. Would it be on Thursday or would it be on Wednesday? It's usually not on Tuesdays, though, right? I don't know. Maybe I'm crazy. And then Friday we will get non-farms after the 4th of July holiday. All right, so yeah, it's gonna be a weird week. Probably gonna be fairly busy. All right, so since we've started, there seems to be iceberging on both sides of 11.5. Well, again, low volume. I don't know if that matters, to be honest with you, dude. It is. I think the thing I would note that is significant about it is that we did, in the end, yes, on Friday at least. Friday, we did completely retrace this thing. So now we're kind of
block sell
back into this area. But I'm still seeing big sells. Oh my gosh, that right there, that was a 5K sell and down 2 ticks. Well, I'm really, really weary about getting in where we're getting all of these icebergs, but it does look like we have a really large meta order sell continuing through today. I do not believe there was any news. So I'm kind of coming back through here looking for, well, okay, there was German HICP. There is some movement going on in the dollar. I'm not seeing any kind of like super big news though. I mean, I think the play here would be short treasuries, long Japanese yen. What I'm thinking. That actually would be that actually I think is pretty nice if you're just doing the spread between those two, because they tend to follow each other pretty well. And like here, as the treasuries are moving down, so is Japanese yen. So weird that there's no call volume or open interest from the 08 strikes down. Yeah, well, I'm sure that they'll start today though, right? Like that was so far away before that I don't think anybody was really thinking about it last week. I mean, like the thing that I've always noticed about open interest graph sort of things is that most of it is around where we've been, you know? I think that most options volume happens in the at the money strikes. The trades at really far out of the money strikes are not very common. Okay, so where was that? That was at 10.5. See, you seen those big orders coming through is a little bit it's not a good place for an entry. It's not a good place for an entry. They went a little bit further and they're already bouncing back up. That's like you're filling your meta order, you shove it at the very end, and that kind of helps you create that liquidity hole that you can execute in. We're likely to stay in that 10.5 area for a while, and then maybe there's another leg. And in this situation, I think that we really, really got to be on the lookout for another leg, and on the lookout for another leg to happen earlier than we anticipate. Like it might happen before the top of the hour. Okay, this is an unusual tweet from Nassim Taleb on Brexit. So many people claim to be vindicated by the collapse of Britain post-Brexit. Brexit might be bad on some grounds, but the data shows the UK share of total GDP within noise from France, Spain, Italy, even Germany over the past decade. That's curious. I would certainly expect some economic weakness for Britain post-Brexit. I think that the whole thing was that we're okay accepting a little bit less economic growth in exchange for freedom. I mean, I think that was the play that they made, and in the long run, I think that they can. I think that they can do well in the long run, but in the short term, Brexit's going to be a drag on them. So, Brexit not being that big of a drag, that it's still kind of within noise, that is a kind of a significant, actually kind of a feather in the cap of the Brexit guys. But I guess it's only interesting to note in the UK because conservatives are on the rise, and you're seeing that's pretty much everywhere. And you saw in France, conservatives gained quite a bit of ground in the snap election that they had over the weekend. It wasn't quite enough to ensure that like Macron steps down. So we'll see what happens there. But there was a lot of volatility. Some of the volatility that we're seeing, especially in the dollar, seems to be because of those elections. We'll see if the dollar turns around here yet or not. Oh, you know what? I'm just realizing now that we need to switch over these micro treasuries. Oh, and we need to go and update our instruments, in fact. So let's do that. Download instruments, update. Chicago Board of Trade and see. I'm not sure which one it will show up under. Okay, let's try that. There we go. Now we're on July N. Why do you think that they changed? Like, I don't understand the month codes. Why are the month codes what they are? Doesn't make sense to me. Okay, well, I've switched these all over to... Oh, there we go. I'm like, is there nothing going on in them? Okay. No, that's pretty good. That's about what we should expect. 4.44, though. There was... Weren't we, like, more like 4.3 in the previous contract? That's interesting. Wonder if it will show me a gap if I pull up a long-term chart here. Micro 10-year yield. And then I say let's just go to type day bars, optimize candlestick. Okay. Yeah. Well, it doesn't necessarily show me a gap though, because there was a pretty wild swing in the yields on Friday anyways. So maybe this rise in yields is not because of a gap. What kind of a beef do I have with the video? That's funny being presented that way. If you go to the futures, what do they call it now? I forget. It's not Futures IO. They changed the name of it. If I go to Futures IO, nexusfi.com, which I don't know why that name makes no sense to me, but if you go to nexusfi.com and then you go to trading reviews and vendors, And then there's a thread. And you can read all, how many pages are there now? You can read all 65 pages of the history if you want. But to make a long story short, I just want to be left alone. He came into my Discord trying to promote things and acting scammy. So I banned him almost right away because he was breaking the rules. And then ever since then, he had a vendetta against me, and I just tried to ignore him. And then more recently, he was having a feud with Matt Coward of Day Trader Paradise, now Rocket Scooter. And in that court case, after discovery, they were in discovery able to obtain all of his records from AMP Futures, all of his broker statements from AMP Futures, and it turned out that on that account, Vinny had lost almost $1 million over the past however many years trading with AMP Futures. So basically, he's been making tons and tons of money selling his terrible system and turning around and just blowing it on AMP. He claims that that's not his only account, but okay, whatever. He fired his lawyer. They're like rescheduling things. Maybe they'll come back. We'll see. But for me, that's kind of like, that seals it. I don't understand how anybody could possibly want to buy that guy's software or watch him or do anything after that whole feud, right? But for me, I'm just a guy that wants to trade, and through a unique set of circumstances ended up streaming it and gaining a following, and I just absolutely love the community. Community is my number one thing, and I don't always make money. I don't. I made money last year. I took a pretty big hit in the beginning of this year that I'm still trying to recover from, but we do pretty good. I feel like we've gotten pretty good at this. So, and I do have some indicators that I use that people want access to. And in order for me to give access, there's a certain amount of extra work and maintenance and so forth. And so that's why I charge for it. So I do sell an indicator package, but it's an indicator package that I use. And then, I'm not making bank from it. I'm sure that if I charged $1,000 a pop for that indicator suite, and then put all of that money into marketing, I could make $1 million from it. Glad you were in peace this way. Yeah. Well, the thing is there was a period where Vinny was making a ton of videos about me and just outright lying, saying that I was a scammer, which is absolutely not true. I am 100% truthful, and integrity is my primary value. That's the thing that I'm most concerned about, is integrity, right? I could go and I could probably make several millions of dollars if I was willing to not have integrity, but that is the most important thing to me. Okay? So the idea that I'm a scammer is just absolutely ridiculous. I've never been untruthful in anything about this. Right? If I'm trading live, I tell you I'm trading live. If I'm trading sim, I tell you I'm trading sim. I show you my results. But anyways, and he also called me ugly, which was like, okay, man, whatever. I accuse it. I think in this case it really was. Uzi says accusations are often confessions. I think so. I think that Vinny has a narcissistic personality disorder, and a narcissistic person in particular is very, very prone to that kind of projection. Like they can't see other people's motivations and emotions and so forth very well, because all they can see is how they want to be perceived, right? So I never downloaded his system. No, I did not. Some people kept telling me that there was like spyware in it, so I never downloaded it. Because there's many times where I've wanted to go in, and because I'm told that most of his indicators are indicators that are already out there, and he just kind of like recolored them and called them different things. And so I want to know how true that is, and if it is, like, compile a list to tell people, well, if you're really that into it, I don't think that there's any edge behind the stuff that he's doing, but if you're really that into it, here are how you recreate the indicators. But I never downloaded it. So now I know many people that have. Part of the way that I got more entangled in this thing was that he would spend so much time trashing me on his stream, because it's just, again, it's just like narcissist. Because I banned him, like, that's a bridge too far for a narcissist, right? So he was just obsessed with me for a long time. He left me alone once other channels took off more, right? It may be the case that his actions hampered the growth of the channel. I don't know. I guess we'll never know. But anyways, oh man, I totally lost my train of thought there. So oh yeah, so anyways, there was one person in particular. He was asking about it on a Facebook group. Like, has anybody used this algo boxing? What do you think? And I said, nuts. It's totally, it doesn't work at all. And the robots in particular are really bad. What they do is they have really huge stops relative to the targets. So it will seem like it makes money every time. But if you use it for even a month, you'll realize that it's not profitable. And the guy, like, just didn't believe me. He went back and forth with me. And I'm like, okay, whatever, do what you want, okay? And then not even like a week later, he came back to me and was like, yeah, this was completely a scam. And he was out all of his money and he couldn't get any of his money back. And that guy is, what does he go by now? I don't even remember what he goes by now. But like, if you go to this thread here, analytic, that's what it is. This analytic, that's who I'm talking about. So then, you know, analytic has been on top of this every step of the way. So you go and he posts every piece of information that he finds, like screenshots from his Discord and all this stuff. It's just, oh my gosh, that's a big huge thing. I that's like way deeper into it than I really want to get, to be honest, but I kind of feel like I told you everything, so that's what that's about. Hopefully, you know, we can just, you know, the channel last week, the channel crossed 15,000 subscribers. So 15,000 subscribers is a pretty big milestone. You know, that's most of the channels that I watch that like blow up, you know, they're usually they have to get above 15,000 first. So, you know, it's still possible that the YouTube channel like just takes off. I feel very strongly, in fact, that we have the best trading content on YouTube, bar none. Well, frankly, anywhere on the internet. Nobody else is talking about this stuff, and the things that we're talking about are real, empirically derived pieces of information gathered from academic studies and peer-reviewed journals that really explain some key things about the markets that have confused and befuddled people for hundreds of years. And now we know, we understand why the market does these things. And we've known this stuff. It's kind of been like, it really started in 1985 with the Kyle model. I think was kind of like the first study that really kind of started people on this track. And over the last 30-40 years, they just keep making these big discoveries until, you know, in the last 10, we've you know, finally realized, oh, markets are inelastic and all of these sorts of things. Like these are key things to know, and we're the only ones that are talking about it. So I'm not going to say that like I'm the best at presenting the information or that I'm like the most entertaining or engaging person, but I have the information. And you go and you watch those videos, especially the order flow video series and the last few videos in that where I talk about the inelastic market hypothesis and proven market behaviors. You're not going to hear about that anywhere else. And that's why we have the best content on YouTube. And maybe someday YouTube will pick up on it. I would hope so, because I feel that there are, some of these things about the market will really, really shift your opinion of markets. And it might change some of your decisions, not just in your trading, but like in politics and everywhere else in life. When you realize that the market is not really efficient, that you have to say to yourself, well, I can't just always do what the market wants, because the market's wrong all the time. And so the only way that we can deal with that is to just do what we know is going to be best in the long term. And I want people to understand that. That's the message I want to get out. Have you ever tried to Markov chain the NQ? No. So you know what? Last week I had the week off. And so we spent a lot of time working. I was able to make some really big developments in some of our indicators. Actually today I might try and do a little bit of work on that, because there's an issue with my indicator. When I shut down, there's a property missing or something like that. It does not deserialize correctly when you save. So I need to fix that. And then we can probably put out a new version of the indicators. It was funny because I was talking to the Ninja Trader guys about, next time that I show up on their live stream. And they were asking me about the volatility projected range. and I was like, well, that's probably like the most powerful indicator that we have on there, except for that hardly anybody that uses Ninja Trader gets the data to be able to use it properly. Because basically you have to be either using Myris or CQG with the extra indexes package to see like the internals of the S&P 500, so that you also get the VIX, and then you can use it. Anyways, but we'll be putting a new version of those indicators out soon, I guess was the point of that. But then the other thing that I did was building a portfolio, a momentum portfolio in Python. And so I spent a lot of time learning. I absorbed so much stuff. I need to review that stuff today. The different Python frameworks. I may, after I have a little bit more experience with the different frameworks, I think that I will probably make a video comparing the different Python frameworks available for backtesting. But the main example script that I was trying to use, I couldn't get it to work yet. I couldn't get it to work. It was really hard. Like people say, Python is a great language to learn in. It's really simple, and that is generally true. But if you're trying to do something relatively sophisticated that requires multiple frameworks in order to accomplish, Python can be an absolute nightmare because of dependency management. You will run into these situations where two packages want different versions of something, and figuring out like what is the correct you can almost always make it work, but figuring out the right thing set up to make it work can be extremely difficult sometimes. It would be extremely difficult sometimes. So once I get through with that, then I might be able to spend some more time doing things like hidden Markov models, and that sort of a thing is something that I really want to get into. So we believe that there is a hidden Markov, it's a model, I forget what we call, with level 2. Because it seems like level 2 will go into these different phases where it will go towards liquidity and it will go away from liquidity. And you have to know which regime it's in. and there's like a chance of it switching. I want to figure that out. Octavia says another leg setting itself up. Well, we have been here in this 10, 11 half-ish area for a while. There is a big iceberg at 11. It kind of looks like, so the first thing is that as long as he's getting stuff here, you know, like if he's able to get a big iceberg at 11 and fill that whole iceberg, the guy that's executing this, he's gonna just let it sit there, right? He's gonna let it sit there until there's a point at which there's so much liquidity here that he's gonna go and try and grab it. Right? So, but we are within the period where it could happen any minute now, right? Like the next 30 minutes, I think we got to pay attention. Okay, now Jake asked, do you know what the Norden method is? Yes, I know a lot about. I have an interview with Gary Norden here on this channel where we talk about it. And when he set up his new course, he used to have like an old course that was like $5,000 or something like that. And he got this little PDF, which I think you could read in an afternoon, and then he would like mentor you and stuff like that. Some people would complain that the course wasn't enough. I think that especially if you were like brand new and you hadn't been training for a long time, you might not realize some of the big kind of revelations that he has in there. You'll just be like, okay, that makes sense. That makes sense. And it won't seem like a big deal. But there's a couple of things that he says in there that are kind of different from what like most traders believe, that are like really, really key realizations to make that are worth a lot of money. Is it worth $5,000? Well, I guess it depends on how much money you have available to you, right? Education is something very difficult to value and is very unique to the person. His way of trading is extremely difficult, and he puts that all up front. Okay, so he's being honest with you about it. Okay, it's a way of trading that's kind of dying out because the robots have taken over. You have to kind of find an inefficient market to take advantage of it, and you have to work really, really hard. Okay, but I do believe that there is some edge in it, and it's edge that it's kind of like, I mean, I could probably make a model up and like show everything to you mathematically and everything, but when he explains it to you, you'll understand that like, oh, okay, yeah, like there's inherently an edge. Just like I can explain to you, you know, if there's not very many contracts on the bid and I hit into the bid just as it's ticking and then it ticks down and now there's an offer there, that means that I can exit back out at break even. There's an edge in that as opposed to hitting into it and, you know, before, you know, when there's a ton on there and then if I want to get out, I'm going to be -1, right? It's the same sort of a thing. And the main gist of what he's doing, and this is the thing that he doesn't say, so I'm kind of like, like I don't want to like ruin it all, okay, because I think it kind of like he has this mysterious marketing around it, right? So I'm just kind of just destroy the mystique around it, and that will give you a better idea of whether it's for you or not. The main key behind how Gary Norden trades is that he determines what fair value is for a particular asset based on what other closely related assets are currently trading at. Like the best situation for him is you're trading micro treasury yield futures and you can see the book in the broker tech cash bond market, and you see a move over there and it didn't have in the micro yields, and so you take a trade because of that, right? Like that's those are two assets that are basically supposed to be interchangeable, right? That's the gist of what he's doing. Okay. All right, so yeah, I cracked the nail. You know what? I need to get like a different multivitamin because I get like even when they're not very long, I get my fingernails will crack all the time. They're fragile. Okay, well, we're having a little bit of a hard time maintaining 11. I mean, that really suggests to me that there's been somebody executing through this whole thing. And there is I wouldn't say it's across the board, but in the 10-year. So we see it in the 10-year, but not in the 30-year. In the 10-year, I can see pretty consistent selling throughout this range. So I think that is a pretty good setup for another leg. Or that leg might go, I'm not sure. Why is my, I thought I changed this the other day. Maybe I didn't. Oh, you know what? I changed it and then I had to reset my workspace. I want like way more levels than that. Yeah. Okay, now we look below us. So I don't really see anything that stands out until we get to the 109 evens below us. Okay, but there was a downtick. I think for me, I should test the waters a little bit first with a sim trade. So was kind of tempted to just hit into 4435. I guess it's a little bit too late now. Okay. So since that downtick at 10.5, not as much volume. Not as much volume yet. Oftentimes, something like that, it would just, it would start again. So that is a little weird. It should be really hard for me to get filled at 10.5 though, right? We'll see. You can see there a little hit at 10 and the liquidity just pulls. So they are kind of... Oh boy. DFV files 13G for CHWY for 9 million shares. Really? Wait, where did he get the money for that? Did he already sell his... Did he dump GME to pay for these? It could actually be people put fake filings into Edgar to trigger stock pumps from time to time. Oh, really? That's interesting. This could be someone who piled into Chewy after the tweet and is now holding bags. They file a fake SEC report to trigger another pump so they can dump their bags. Of course, the SEC can pretty easily nail down whether this is RK or someone else, or it could actually be RK. Either way, it's a wild story. Well, that's going to be interesting to watch. Okay, so there was a downtick, but it didn't hold. Not feeling as good about this. I'm going to cancel my order. You know, if I had the short from 11.5, then I could probably wait and see, scratch it if it comes back up there. But it's kind of acting a little fishy to me. So, we're thinking, because you guys asked me all these questions and stuff, and I kind of forgot, but we never We never did the notes. So let's do that. Okay, there's another. They're hitting an 09.5. I suppose we could take it as she goes, like this one here. That lot that we had wouldn't have gotten filled anyways. So flows. Okay. So today we've got ISM, manufacturing ISM. We've got some Fed speeches, right? Who is it? Is it not until after? There's like Ward, Nagel. I thought we did have some speakers. Okay. Hell, we got a 3-month bill auction. Lots of economic data this week. July holiday. Strong selling from Friday continues. Suspect Japan. Okay, so what we're expecting is contained action outside of economic releases, with a possibility of strong sell trend in ZN. Okay, it hit. It did get 09. I'd still say that they're being a little finicky about it, but it does look like the downtrend is happening. One thing that also has me a little bit on edge is that on that move, I did not see selling in the 10-year Treasury. In fact, I saw it selling in the 30-year. And another seeming rise in the steepener in the yield curve. A steepener in the yield curve by about 3 ticks. That's still within the range of the day. So we'll see if it continues. So far, this scalp seems to be not working. I don't have to panic and hit into 09.5 yet. It did catch the edge. It's just nobody filling at the next price, right? Okay. So this 09 is now starting to show signs of low resting liquidity. Let's see if I try and save a template. And this, will it give me... There is an error reflecting type. Yes. Well, I was hoping it was going to give me a better error than that. But at least I can test it if I think I find what it is. Hmm. Hmm. Must be that line style cover. Oh, I was stop paying attention. I guess I got a bail on that. I don't know. Not. I don't think that I can count out the next leg meta order yet, but that does not seem to be quite what I was expecting, so. Come on. Did not save indicator. Really? That doesn't cause a breakpoint, huh? Darn. It may yet. Alright, back to 09.5. I don't know. Kind of focused on this now. I think I'm gonna do this. Okay, so if I I'll do it this way. I tell it to ignore this one particular property. Nope, that's not it. Yeah, I don't like the way this is acting here around 09 half 10. Seems like it's just trapping people. Hmm. Do you get to see delta volume on JT? What is JT? Jig? No. I feel like I should know what this stands for. All of the platforms that I have uses you know, you can do delta volume. Jigsaw trading, jigsaw day trade, I don't know, but you can, yes. There are indicators to show you delta or cumulative delta. Oh, I see. Yeah, on Jigsaw. Yeah. So like their charts, you know, I don't use their charts because I have so many custom indicators in NinjaTrader, right? But if I pull up one of their charts, right, there's one of their charts, and then indicators, cumulative delta is one of them. Volume chart, what's that one? Enable the bid ask profiles in the settings over here. Or are you talking about in the indicator settings? Oh, yeah, well, you can also do that. Enable bid ask profiles in the settings. Okay, yeah, you're talking about something. You're talking about if I come in here and you're saying turn these ones on. And then it shows up as a big number over here. Oh, where's the bid one? I'm not really a fan of the bid ask profiles, but it's not like there's no use in it. It's just I don't feel like that its use is justified by how much space it takes up, you know? I used to use this, so I remember how to set up. There's so many little features they've added here and there that, you know, I don't use. Oh, you know what? Maybe it's because now I have debug mode turned on. Ha. Oh.
Connection lost.
You see. I think that will reconnect. I see where my issue is. Yeah. Yeah, I guess these shouldn't be public. These should be protected. Or maybe they should be private. I think I can get away with making these all private. Da-da-da-da. Okay. Get rid of this. F5 over here. Cool. Templates. Save as. Test. Save. Paste it. Yes. Yes. Okay. So now we're good on that front. Well, you know, if I had taken the short at 11.5, I would have made a little bit, but I don't think I would have made enough to justify taking a trade. So you've been dollar cost averaging AT&T, and it's actually profitable now. Let's see, where are they at? AT&T can't be that far up, can it? Let's see here. T. Okay, well, so first of all, I don't need the fixed range estimates and all this other jazz. What's this that I got on here? I'll just remove it. Oh, well, okay. That's not terrible. Well, I'm above $20 still. So if let's add the ES on it. Same percentage scale. Okay. So obviously the S&P 500 has been killing it, but over these last few days, looks like AT&T has indeed potentially been outperforming a little bit. Yeah. Well, that right there, they're up almost 10% in the last month. Wonder what that's about. When it pays out its dividend, it will crater again. You think so? Why would it? Wait, why? Because shouldn't that already be expected? Why would paying out the dividend make it crash? That's... Hal says it's waiting for PMI. That might be the case. Or that might have just been all that they were going to do today. I don't know. It just usually goes that way. Those of us who reinvest the dividends automatically get our shares at a higher price, and then bam, it falls. Oh, yeah. Okay. Maybe. I suppose that there could be some people that are holding it just for the dividend, and once they get their dividend, they sell. That could be a thing. So Chewy, doesn't look like it's actually up today, despite a huge move overnight. Ooh, that's a huge move overnight. GameStop. Ouch. If RK was already out, that would be something. Maybe we should just go over to Koifin and look at that. Coinbase is doing well this morning. Yeah, Bitcoin did have that little jump. So it might not have make up for what it lost last week. Constellation Energy up. The one marijuana stock that I had on my list is getting destroyed today. Oh wow, Zello was up 15% over the month, huh? Wait, what are they at last price? 45. Seeing a bit in TLT. Okay, so let's talk about the news at the top of the hour a little bit, shall we? So for the ISM manufacturing PMI, they're looking for a reading of 49.1 versus a previous reading of 48.7. So contraction, but higher than last time. For prices paid, they're looking for a reading of 55.8 versus a reading of 57. So if those prices paid are in line or lower, you know, I think that the market will probably react to that. But on the headline number, I kind of suspect. Oh, and by the way, we do get the S&P manufacturing PMI as well there. That's looking for a reading of 51.7. Okay. I kind of suspect, though, with the way that the data has been going with these PMIs, that it might be a little weaker. Like, let's say 48.5. We're really looking for 49.1. It was 48.7. Let's say it's just a little bit below last month, right? And that would be a bid. That would be a pretty clear bid to treasuries, right? Like, oh, yeah, the PMIs really are strongly suggesting a weakening economy now. Lots of hype because of weed, bro, but the black market for it is still more popular than the legal one. If you want access to the weed market, just pile up tobaccos because they're gonna gobble shit stuff up when the weed. So yeah, I am not bullish on the weed market, on marijuana stocks. I am not bullish on them whatsoever. And you know, but people were interested in it. I put it on there, and you know, with the way that it's been going, I mean, it is up 25%, 23% on the year, but the last month they're down 10%, and the last day they're down 14%. It just doesn't look like a very fertile market. There are, and it's not just where you're saying that the illegal market is not more popular. I think that there are just other issues with the business in general. So I don't think that is a very strong stock. Let's see here. Tech names. So most of my tech names are down. So if we get PMIs that are weak, that could really help those tech stocks, though. Copper is doing okay. That's interesting. Well, I mean, I guess copper is up on the session. But Freeport McMoran is down 7% over the month. I guess if you're bullish copper. Oh wow, that thing is way more volatile than I thought it would be. I don't know. Really, the cut the play would have been earlier in the year. Or would want to see it come down a little bit more than that. There's a little bit of a head and shoulders forming in there. But I'm kind of suspect that they'll go sideways for a little bit and then higher again. But either way, I don't think that that's a good entry for me. That's one of the ones that I'm kind of like really paying attention to. Yeah, all of the tech stocks are down today. Some of the dogs, the dogs of the Dow strategy. Well, okay, Amgen is up 47% over the year. Verizon 21.32. Okay, well. But I would say that overall, the dogs of the Dow strategy has not been performing as well. Like Walgreens has just been absolutely destroyed this year. FG, I don't remember why I have them listed now. Defensives are up, but only a tiny bit. Most of our evil stocks are down, except for Boeing. Boeing is up today. I hold WBA and VZ. Wait, which one is WBA? Oh, Walgreens. Yeah, what happened? What happened in Walgreens? I think that there was a specific like a headline. WBA. Oh my gosh, that's terrible. Dude, that is what the heck? What the heck is going on with Walgreens? A lot of stores closing in restructuring plan. You know what that reminds me of is there's this big thing going on where people are saying like crime is increasing, and there was some stats that kind of suggest that crime was increasing, but then overall I would say over the last 5 years it looks like that crime in inner cities has actually decreased. But then all of these people say that that's not true, that they are actually fudging the numbers, that like a lot of municipalities and so forth have decided that they are not going to report their numbers to the FBI anymore. And so we don't actually know the real situation. And that certainly is, I mean, I know that is the case, that there are some municipalities that have done that. But like how many have actually done that, and like what is the overall impact? I'm not sure. So I have to stop short of fully endorsing that position. You know? But it is something out there worth looking at when you're looking at some of these statistics. And so this is key when it comes to shoplifting, because like, you know, a lot of stores have been closing in California in particular, and they're citing the shoplifting and stuff. And then these people say, well, that makes no sense because all of these numbers are actually better. But then people say, well, yeah, because you're not actually reporting the numbers. So what is the truth of the situation? I don't know. But like the thing is that they're all saying, oh, these are just greedy corporations trying to squeeze people for all they're worth, yada, yada, yada. Okay, but like Walgreens isn't doing well, guys. Walgreens is not doing well. And they're the quintessential one that I think of when I think of closing stores, you know? So, I don't know. Oh, by the way, I never Ninja Trader did not reconnect. Let's get it to reconnect here. I must still buy it. Walgreens? I'm kind of thinking here, like, when a big name that I know a lot about, and I go to Walgreens still. I mean, I get my prescriptions filled at a Kroger store. But I will still go to Walgreens, especially if it's like, I want it filled that day. It's not the greatest store in the world, but I think it still has a use. I would think that it should still be making money. So, like, yeah. Let's see, is it going to reload my... Yeah, there we go. 12 half. But I have to think about how much do I act... Because the issue is not just... Okay, could I probably invest in Walgreens and eventually make a return from it? I think probably. But is it the best opportunity? Especially if I'm only going to own 10 stocks max, Pharmacy aspect will always have value, plus brick and mortar assets. It pays a decent dividend and will have more than enough value for me to work position and ultimately out. It won't be a major home run play, but it qualifies to be a piece of the puzzle. Right, but so for instance, one thing that I think is worth having in your portfolio is a stock that pays a good dividend, a dividend payer. So if I'm only going to have one of those, if I am only allowed to have one dividend paying stock in my portfolio, would I rather have AT&T, Verizon, or Walgreens? It seems to me like Verizon is the play. Maybe AT&T. Let's see. Yeah. Well, AT&T has done really well in the past 2 days. Your entire portfolio is dividend investing. Well, that's too concentrated, in my opinion. I think that, like, for instance, I think that you want to have one high growth name in your portfolio. Like, maybe not like a high growth name, but like, something that is speculative. It could be a penny stock. It could be Tesla or whatever it is out there that are just like getting huge returns right now. Nvidia. Like I think you should have at least one of those in your portfolio. I think you should have a really large cap in your portfolio. Exxon Mobil. I don't know what's the rest of them. Chevron, CVX, COP. What's COP? ConocoPhillips. And Valero Energy Corporation. That's not a very diversified portfolio, Uzi. Let's find how can we diversify. This is one of our favorite games. I don't think that he's going to do this. Okay, he's got other stuff. IBM, Whirlpool, UPS, FedEx, CVS. No, I didn't say I think your portfolio was small. I said that doesn't sound very diversified. Uh-oh, Sarah. You're using the triggering words like smart money and ICT. These words are triggering to me because these are concepts that we've tested and they don't work. And they conflict with some of the empirically proven market information that we do have as I think ICT is complete nonsense. But you asked an actual question. Intermediate. I think that means that you feel that you are an intermediate trader. Understand the pullbacks using HFT, but need help with sessions and using 2 pairs at a time. Okay, so you're going to have to expand on using 2 pairs at a time. Are you talking about trading currencies? Forex trading? Are you talking about using Forex trading? Your portfolio volatility is around 10%. What is the what is the Sharpe rate? Do you have a way to calculate the Sharpe ratio on your portfolio? What's your Sharpe ratio? Like Sharpe ratio over the past 1 and 5 years. Okay, so currency trading. So here's what I would say about Forex. So when you're trading Forex, essentially what happens is your Forex broker, they are on the interbank over-the-counter network that trades currencies, and they give a bid and ask, and you're trading against them. Okay, so you're always, in a normal market, there's somebody providing a bid and somebody providing an ask, and you can decide which one you want to hit into, or if you want to join the bid or the ask, or whatever the deal is, right? In the Forex market, you can only trade against that broker. So your broker in Forex is basically incentivized for you to lose money. They make money by their customers net overall losing money in Forex. So I do not recommend trading Forex. I don't think that it's a very fair game for you. If you really, really want to trade currencies, what I would do is I would trade currency futures. So if on the CME they have futures for the euro and the Japanese yen and all these things, they're usually the opposite. Like most currencies, they go dollar yen, whereas if the 6J, it's going to be the opposite of that. Like I have the 6J over here. Okay. But it's actually way better here, because if you do this, like the yen is weakening and you go and you trade the currency and it will be up, right? The chart is the opposite. So it's I prefer to trade it this way anyways. Okay, but that's how you would do it. But even then, like focusing purely on currencies, I don't think is a very good game, because at least not for day trading, because there are insiders in government and so forth that know a lot about what's going on and the things that you can't possibly know yet, and they can trade on them and you can't. So you're at such a huge informational disadvantage in the Forex space that I think that it's very, very difficult to make money from trading currencies. Okay. Now, currencies can be a really important part of like a momentum portfolio. So they still have a place. Okay. Just day trading, I would avoid them. All right. And when it comes to pullbacks, here's what I'll tell you about pullbacks. Okay. So what we know about the market is that markets are very inelastic. And what that means is if you come in and you buy something, it has a much stronger impact on that thing than you realize. Probably 5 times more than what you would like intuitively think. Okay. So of course you, as like $100 or however much you're trading, is not like a huge impact. Okay. But you don't have to be very big before you do have an impact and you move that particular asset. And so these large funds, they have to use all sorts of tricks to get those fills. Okay. And that's the thing that you kind of have to realize. When people talk about like smart money concepts and all of that, they all think of it as their objective is to screw you over and stop you out first before sending it the other direction or something like that. That's not actually how it works. What is actually going on is they need to buy a certain amount that day, no matter what. And often it's because It has absolutely nothing fundamental to do with the market. Doesn't matter what the news is that day or anything like that. It's just that by a certain date, they have to buy a certain number of contracts because that is what their fund is supposed to do. Like, that's in their fund strategy documents, and by law they have to hold to that. Okay, so they have to buy a certain amount, rebalance their portfolio or whatever the deal is. So if I come in here and I have to buy a certain amount of treasuries, then the whole question is, how do I do it? How do I buy that many treasuries, right? Because if I just come in and I just say, okay, I need to buy 10,000 treasuries today, and I just buy them all at once, you know, I'm gonna move the market 4 ticks right away, if not more than that. And I'm not going to get a very good price, am I? So I don't want to trade it all at once. So what I do instead is I will split it up. I'll split it up into a bunch of little 100 lots, for instance. Or maybe even split it up as much as 1 lots and just trade them all over the place, right? And I'm slowly buying a little bit. Now, you are still going to have an impact doing that, right? And it tends to follow a square root law. So what they will do is they will create what we call liquidity holes. So you come in and you trade a bunch, and over a 5 to 10 minute period, you push the market up a certain amount. This would be more like, let's say I need to buy 100,000. Okay, I'm going to move the market up a little bit. When I stop buying, the market's going to fall back on itself a little bit. Essentially, you're pushing it up. The liquidity behind you basically disappears. Well, the latent liquidity, it's not there. It takes time for that liquidity to build up after you've just traded it. So if we move it up, there's going to be a tendency for it to fold back on itself. Okay, so here's your move. You're going to trade it like this, right? There's kind of an upper limit on how far you can move it. And once you reach that upper limit, you stop trading, and the market will do this. It'll pull back, and it will go into this mean reversion, post-meta order mean reversion period, okay? And during this period, you can continue executing, but just not as aggressively. And you can actually trade like twice as much in this area as you can in this area. So that's what happens is they push it, they let it pull back, and they execute less aggressively in that mean reversion period. Now, if it's a really, really big order, like if I was trying to trade 100,000, probably would be big enough that I would need to do it again later, and then you get a second leg, okay? So I'm showing you it like this curve because that's kind of showing you the impact of the trades and the volume and stuff. But what people typically see on the chart is like this, right? These are these pullbacks that people talk about. These are the pullbacks that people talk about. So that's what you want to look for. That's what I look for, right? And it's not like, oh, okay, I see this and it's pulled back, so I want to buy it here and it's going to go higher. That's not the trade, okay? The trade is, I think that they're buying it today because of, you know, I have some insight into what the future flows are going to be based on news or whatever the deal is. So for instance, in this one, I kind of suspect that manufacturing is going to be a little bit weak. Let's see here. We got about 40 seconds. If that was the case, you know, I could have been buying it down here at 11.5, for instance, right? And then the news event happens and we should get that flow long that I'm expecting, right? And if I'm right, I know what it should look like. So I'm getting, you know, it's getting in here. It's not doing anything. I get in right here. I'm expecting it to go like this, right? So the pattern is the result that I want. It's not some sort of thing that triggers me in, right? Okay, here it goes. 48.5. Oh my God. I was just guessing. I called the headline number exactly. I said 48.5. Oh my gosh. That's hilarious, man. Okay, decent pullback on that though. That was a pretty good one. Okay. So, yeah, no, I didn't trade it. No, I didn't. Well, you know, when we were down in there, because I was thinking meta order short, I took a sim order there. It wasn't doing what I wanted. I took a loss on it. After that, I was like, I guess I have to wait until after news. Now that we've got the news, now we kind of get to sit back and readjust. So let's see here. Prices paid. What they were expecting 55.8, and we got 52.1. So I think, well, we got a pretty good pullback. I must say. So it might be a little difficult to pick a spot, but let's see. Try a sim again. I want to get like a good winner on sim first before I start trying something live. I'm kind of thinking meta orders sell is maybe over for the day, and that news is something that could potentially continue to drive us up. The yen really jumped on that, by the way. Look at the yen. Wow. The yen really jumped on that. Well, if the yen is going to jump like that, maybe they don't need the money to be able to intervene. Okay. So I can take another one at 13. And I'll take some sequential profits here if we can. I don't think I want to take more risk than that, though. We'll see what they do. Okay, so anyways, what was the next thing that I was going to say? So with the smart money concepts, usually what they do is they say this. There is this price level that's super, super important, and we've bounced off of it before. So what I expect to happen is they are going to go below that price, come back up, and then bounce here like this, and I want to buy it right here at this spot. Okay, so why are they making it do this? Okay, well, and more specifically, how do they make it do this? Okay, well, if I come in and I sell, market sell, then that's going to make it move, right? But then I'm taking on inventory short, right? So if I'm taking on inventory short to make it go through that level, I need to expect a lot more people to sell than what I'm spending for it, right? And that kind of puts a huge limit on how much of that I can do. Now, another thing that I can do is I can kind of make if I'm the market maker, if I'm a large portion of the market liquidity, I can also just always pull my bids, right? That'll happen. That'll totally happen. It will give a stock kind of a tendency to go in a certain direction. But when it comes to manipulating things by moving them around, okay, that happens. That's trading, but there's a cost to it, right? Because if I'm selling it, then eventually, in order to make a profit, I have to buy it back, right? Which means that I need more people to sell. I need just, if I take on 50,000 contracts short in the Treasury or whatever it is, to push it through this line, then I better expect more than 50,000 contracts to sell into me after that in order to make a profit. Otherwise, my impact is going to push it up and I'm going to lose money net on that transaction, right? Meanwhile, the large institutional trader that I was referencing earlier, he still has to buy, and he's going to buy no matter what, right? So this whole game, it doesn't make sense. If we know what the pattern is, we're going to trade differently. We're going to be like, oh, well, we know that break. We don't care about that, so we're not going to sell into it. And then his trade doesn't work anymore, and then it doesn't do that thing, right? The net result of the patterns like that is noise. Ends up doing nothing. It ends up just being noise. So instead, what we do is we look for the guys that we can predict, that have such a huge impact, right? So for instance, they do rebalancing at the end of the month, and there's flows that you can kind of predict there with that, right? Okay, well, I tell you what, that drop below 11.5 was definitely not in the cards for me. I think if this was a live trade that I would stop out there. On this sim, I'm gonna let it breathe a little bit. I am seeing some pretty heavy selling though off of this. Interesting. Interesting. Okay, so for me taking a live trade, you know, I take the sim trade because this is kind of tests the market, kind of helps me focus on the market a little bit more and see what's going on. So what did I learn with my sim trade? Well, the market did like that number, but net overall, they sold after that number more than they bought. So there could be whatever was this large meta order sell could still be there, right? Could still be there. Another thing that could be going on, because remember the Japanese yen really took off, and the Japanese yen has completely retraced. So those funds and so forth that have been selling the Japanese yen, they still want to be short the yen. That might be, the Treasury might just be going along with it. But this is starting to give me a lot more confidence in the Federal Reserve cutting interest rates soon. Okay, so let's recenter it. You're too good. Yeah, I don't know. Like, one of the things that can be really funny here is, like, I can call that number exactly, right? But then the market doesn't do what I expect off of that number, right? They did initially. They did initially. But now after that, we have some theories on why it's doing what it's doing, but we don't know for sure. But overall, they're after that news hit and the knee-jerk reaction higher, since then the flows have been short. Right? This is why, like, the approach that I'm giving you here, the real advantage to this is that you can always explain what's going on. There's a lot of people that they just kind of like, well, they can't make sense of it. And there's always things that are going to not make sense. With the way that we're trading, there might be things that don't make sense in that moment, but by the end of the day, you should be able to take the news and everything that we know and get a pretty good idea, or at least a couple of leading theories about why the market is moving the way that it is. And the whole thing is that the flows move the markets. So what we want to know is what was driving the flows. What was the reason behind why those orders came out? Some of it is random, but the ones that really move the market, usually there's a reason. It's just a question of, is it a reason that we would be privy to? Right? So, like, if the Japanese are selling treasuries to fund intervention, that is something we can maybe kind of guess that they might be doing, but we're not privy to it, right? We're not government insiders. If we were government insiders, we could go and trade it, and we could be buying the yen right now. That's what they would be doing. Buying the yen right now, knowing that like intervention is coming, right? So yeah, that should give you a good kind of baseline. I would recommend going and watching on my channel. I have an order flow video series. Just go and watch that whole video series, and it goes into a little bit more about the research. It cites the research, so you can go and read those papers if you want, see where we're getting all this stuff from. Okay, so 2 ticks up isn't bad. I took my second contract at 13, so obviously we want it to go a lot further than that. What is this? Okay. The decision has been made that Biden will quit the campaign, says Bill O'Reilly. Two reasons. Democrat internal polling says he cannot recover from the debate, and fundraising is drying up. So it is over for Joe, but the White House doesn't yet know how or when to make the announcement. Stay close. Okay, so that's interesting because the story that I'd seen yesterday on Reddit was that his family was exhorting him to continue on. You know what, though? And this politics is, man, trying to predict politics is always kind of a... I don't know if it can really be done. I think that a lot of what happens in politics is just random. But it is relevant to the market, right? I think that Joe will drop out. I think that he will drop out. So I think that he has to. The whole thing that kind of got the Democrat Party in this mess is that they wanted to hold to power. They said, oh, Joe Biden, he's our best chance, even though we know that he's got all these problems and everything. And then when his health started to go down, they did everything that they could to hide it from us. Why? Because they wanted to stay in power, right? So if now that the gig is up and everybody knows the truth, that he's just not all there now, they're going to just ignore it so that they can continue to cling to power, right? Doing that would do so much long-term harm to the image of the Democrat Party as a whole. So, as a Democrat, you might say, well, yeah, except for that none of the other candidates can beat Trump, according to the polling. Okay? Two things on this. One, I wouldn't trust polling in this situation because name recognition matters more than almost anything else. And nobody really knows any other politicians right now other than Joe Biden and Donald Trump. Okay, so those polls aren't going to give you something that's accurate. By come election day, people will know the names and you get different results. Okay, so that's the first thing, is the polling is useless in this situation. Number two, though, sometimes there are situations where you just have to take the L, right? Like, if you run Joe Biden, you lose. If you switch to a different candidate, you lose. You're going to lose either way. So my advice would be for the Democrats is to take the loss in a more dignified way and kind of try and save the reputation of the party in the process, right? So you pick somebody, yeah, they might be a lamb to the slaughter, but, you know, at least you can stand on some principles and stuff instead of just, you know, clinging to power with every desperate bit of energy that you have, right? Like, they have a chance that, because what they've done here, I think it's going to hurt the Democrat Party across the ticket, right? Because it's really quite an extreme violation of trust with the American people. American people want a president that's competent and can take charge and do what's necessary if something bad happens. In fact, quite frankly, I think that at this point, Joe Biden should resign as president and have it be Kamala for the rest of the... I know nobody likes Kamala, but I think there's a real problem with having a president that is as mentally incompetent as Joe Biden is. So every second that he stays in there, I think, is harm to the Democrat Party. And that's why I think that ultimately, after a bunch of wrangling around, that Joe Biden will drop out of the race. Now, at the same time, it's going to take a lot. Like, there's going to be a lot of back and forth and drama, and, you know, like, I'd be really surprised if it came out today, that if he dropped out today. So you never hear a liberal, like, when they implement a policy and it doesn't work, or the American public doesn't like the policy, you'll never hear them say, well, it was a bad idea. They'll always say, oh, we weren't progressive enough, or you know, the public just doesn't understand it. We didn't have good messaging, right? the reason for that is because it's kind of built into being progressive, let's say, it being left wing, right? Being wrong is built into being a conservative. Because as a conservative, you have to admit that, okay, in the past, there were certain things that weren't very good, and then we made a change, and then things were better. And if you're a conservative and you're always towards or leaning towards, keeping things the same, then you have to admit and you have to leave room for, but actually sometimes things do work out. And so the conservative position sometimes is wrong. Whereas the left position, right, they're always right. It's always, something changed and is better, so we should change all the things. Right? There's no room in liberal philosophy to be wrong. And so liberals, they don't give up on things. They will cling to things, and when they get power, they will cling to it as hard as possible and do whatever they can to keep to it. Right? It'd be very, very difficult to convince Joe Biden and his family. Like the reporting that his family is exhorting him to stay in the race. Why I'm using that word? They're urging him to stay in the race. Doesn't surprise me at all, because they get nice benefits from doing that, right? But I think that the dynamics are as such that eventually he will have to drop out. Yeah, I read specifically that Hunter was, of course, Hunter, because he's the one that would have the most to lose with Donald Trump being in office, right? Okay, well, this trade ain't working out. The 30 years still selling hard. I guess I knew that was in the cards, which was, I think, a major factor behind why I took it as a sim trade. I'm gonna scratch that. Well, not scratch, but I'm gonna puke that, rather. I'm still kind of thinking that I want to see rates come down, but I've got to be sure that these Japanese flows are gone first. Not super relevant to chat, but I finished that whole line of reasoning. Right. But my purpose in this particular one is not to necessarily take a political position. I mean, I can take political positions, and I will. But my purpose here is more to help us understand what's going on and what is likely to happen, and how it relates to our positioning. Because it looks very likely right now that Donald Trump will be president again, and the market likes that. That's a buy for markets. Is the first, at least, short-term results here. Okay, but to your question, Marcus Lee, it is generally my observation, and I do not have empirical evidence to back this up, but it is generally my observation that traders that are executing large flows are much more cavalier when they are entering a position than when they are exiting a position. Okay, so when you're coming in and you're starting and you're opening a position, they use a lot of market orders. Well, like, just think about how you as a retail trader might do it, right? If I want to go short, I might hit in with a market order and try and catch the edge, and then I will put a limit order out there somewhere and wait for me to get filled on the limit order, right? So you're more aggressive on your entry than you are on your exit. And I wish that we had the kind of data to be able to make these kinds of conclusions definitively, but we just don't. You'd have to have all of the information about all positions in the market, right? But it seems to me that they're more aggressive when they're opening a position. Okay, but the other side of that, and why is it long? Well, more generally, people buy into assets, they go long, right? Like, there's just not as many people going short the market as there is going long the market, generally speaking. So, in other words, there is more money coming into the market when an asset is going up, essentially. And so you will tend to do better when that market is going up. So they kind of say that, like, in a bull market, Like everybody's making money, and in a bear market, even the very best are break even. I mean, that's kind of the way that it is. And especially if you're trading equity indexes, like there's way more money to be made going long. There just is. There just is. The Treasury can be a little bit more two-sided, but even then, you know, okay, there's been a lot of money going short in the Treasuries, and there has been a lot of money that has come into the market short. Okay, and so you could have made money going short. Okay, but that's not nearly as good of a looking of an opportunity as when money is coming into the Treasury market long. Like if money comes into the Treasury market long, it's going to be like, holy crap, you're just going to be absolutely blown away by the trends that you get long and so forth like that. So if you need to mark it in, that's because the move is aggressive, and working a limit order to get out takes advantage of that. Well, and if you're executing a large meta order, my understanding is, and I don't know why this is, but my understanding is that it's beneficial to them for at least half, if not more, of their volume to be market orders. So I don't know what's with that, but you think about it, right? Like if you bought it, okay, that's cool. Now you're trying to get out, and let's just say that you're getting out and you're like scratching it. Like you had some profit and you're quickly losing your profit, right? Like you just get really stingy because now you know like how much money you're making, and like the specific prices matter to how much you've made and all of these sorts of things. So it's just like, for some reason, the market is way more stingy when people are taking profits. Look at your ZN 1 minute chart and where the high of the news spike split. Oh yeah. Those, you know, I didn't even notice that, but that's a good catch. They literally went to our cost basis for the buyers and immediately stopped right there. But the volumes on these don't really make a whole lot of sense, right? Like here in the 10-year, was there actually a lot of volume on that trade? No, there was not. And then we come back out and we go into the 30-year and we look at the same thing. And was there a lot of buying? Well, there was a little bit of a spike there, but then like huge selling came into the market. So that looks to me like, okay, market waited for the news. The news was dovish, let's say, does suggest that the economy is slowing and all of these sorts of things, but that the large meta order sell doesn't care about that they still need to sell today no matter what. That's my best theory. Now, there could be something in that news that I'm missing that suggests that is actually a hawkish, and I just didn't see it. But I'm not seeing that. I guess now would be a good time to come over to Zero Hedge and see if they have a story on it. Okay, with hard data collapsing last month, soft survey data from ISM and S&P Global this morning was mixed as usual. S&P Global Manufacturing rose from 51.3 in May to 51.6 for the final June print. ISM US Manufacturing PMI dropped from 48.7 to 48.5 in June. So WTF, need more confusion? The S&P Global noted that the higher supplier charges were signaled in June. Alongside rising labor costs, this resulted in a further marked increase in input prices, but ISM saw prices paid plunge from 57 to 52.1, well below the 55.8 expected. Okay, so they're saying one survey is, you know, hawkish and one survey is dovish. Okay. New orders rebounded in June, but employment dropped back into contraction. On the bright side, orders/inventories, typically a leading indicator, ticked up in June. Chris Williamson from S&P said, the S&P Global PMI survey shows U.S. manufacturers struggling to achieve strong production growth in June, hamstrung by weak demand from domestic and export markets alike. Although the PMI has now been in positive territory for 5 of the first 6 months of 2024, up from just 1 week positive in 2023, growth momentum remains frustratingly weak. Factories have been hit over the past 2 years by demand switching post-pandemic from goods to services, while at the same time, household and business spending power has been diminished by higher prices and concerns over higher for longer interest rates. These headwinds persisted into June, accompanied by heightened uncertainty about the economic outlook as the presidential election draws closer. Finally, despite the uptick, Williamson admits the truth under the surface of the survey. Business confidence has consequently fallen to the lowest for 19 months, suggesting manufacturing sector is bracing itself for further tough times in the coming months. However, we are sure business owners everywhere were reassured by the commander-in-chief's commanding performance in the debate last month. Okay, so although they're seeing some like divergence in the surveys, it sounds to me like overall this is still like it looks like the economy is slowing. So I don't see any way for that piece of news to have been triggering large selling. I think that the sell flow that we got was something that doesn't care about the news. All those guys bought and then they just got buried by the seller. Seller said, "Oh, thank you. That gives me a better price. I'm going to sell it now." You think it's Japan? I kind of really feel like it's Japan. Okay, Alligator does have an alternative theory. Alligator's a guy that's been here with us from the very beginning in our Discord. He says, analyst notes say Trumponomics are inflationary. Weak PMI, lower prices paid. So it could be people making a bet that Trumponomics are quote unquote inflationary. I have a few, what would we say, reservations with that. I have a few reservations with that. Number one, I think that that kind of a trade would be several large hedge funds making a bet like that. Okay. And I think that somebody making such a bet would probably be executing it a little bit different. It wouldn't have as clear of a, leg pullback sort of a thing, because you have multiple people kind of like fighting each other for it, right? I also don't think that it would be like so heavily concentrated in the 30-year. Like why are you going to raise rates in the 30 years so much more relative to the others? I'm not sure that makes sense to me. Do I have another reservation makes me think that that's not it? Oh, well, I guess the broader thing is that the policies being proposed right now, or let's not say being proposed, the policies that Donald Trump is running on are extremely unlikely to be the policies that are actually implemented when president. So if you're making that bet, I personally don't think it's a good bet. Like, I think that the big thing why they're like, oh, Trump economic policies will be inflationary is tariffs, right? Donald Trump wants to implement tariffs. And there's kind of like this fever dream among some of the biggest conservatives that we're going to eliminate income taxes and move everything back to the government funds itself almost exclusively off of tariffs, okay? It's never going to happen. Number one, there's no way that you would be able to get enough revenue to run a modern economy off of just tariffs. So it's not even practical. Number two, people will hate it, right? Like all the costs of everything will go up and people will hate it. And Congress would have to implement it. And I think that all of his economic advisors will tell him it's a dumb idea. So that's why I say Donald Trump might be running on tariffs and so forth like that, but like, and I'm sure that he would probably reignite in ways the trade war with China, right? But beyond that, I don't see a lot of that changing. I think that the next Congress is going to be not quite as useless, but still pretty useless compared to the current Congress. Okay. So I don't think that those things are actually going to happen. Well, still, I think that it is a good theory. I'm still favoring the Japanese yen theory. Let's see here. Does Japan actually own more 30-year treasuries than other things? Japan Treasury holdings by maturity. Well, Japan owns the most, but that doesn't show me by maturity. I don't know about second leg right on time, man. It's just been sell since that news, right? Actually, kind of curious. There hasn't really been a pause in this downtrend since. Probably could have started doing like anything below 10. I guess I could have started selling. My problem now is I got 30 minutes left, and like my first 2 trades on Sim weren't very good, so I never got to the point of taking a live trade. I don't think that the data exists. I'm finding stuff like a really detailed information about foreign country holdings, but they don't show me like 5 years, 30 years, exactly, etc., etc. So I don't know how much like they hold. It was my understanding that they hold more long-term securities. Yeah, I think the biggest thing holding back this is the Japanese government selling theory is that the Japanese yen has gone lower with the treasuries. 5 dip? I don't know, man. I mean, I wanted to buy after that news. I'm still kind of eyeing the, you know, well, let's go back to a larger term chart, shall we? I think that the Federal Reserve is going to cut rates, and so what I think we're going to see is a long-term uptrend and pulling out of this rut. But all of the sudden, the market seems to be like getting really, just the past 2 days, really aggressive on higher rates. Is it because, I mean, it has been way more since the debate. I mean, it really has been since the debate. So it could be a play on Trump winning. Man, I really still think that it's the Japanese, though. But I kind of feel like with like the evidence that I have here, I'm not sure I can justify me leaning that direction so heavily. You know, I'm not quite sure why I'm leaning that direction so heavily. Maybe it's just because I've seen it before, and this reminds me so much of the last times that Japan did this. But I am kind of like, why aren't they intervening here if that's what they're doing? Unless they really don't have the money yet and they really have to wait until they're done selling the treasuries that they're going to sell. I'm going back to ZB. The size in the book has been really good. Well, with them trading 1,000 lots in there, I do think you have enough liquidity to just, you know, and especially if the flows are over there, right now, I think it makes a lot of sense to trade the 30-year for sure. Like the spread and the direction of the outrights suggests sell the 30, right? The only caveat is it's twice as much risk per tick, and it ticks more, so it is more risk to trade the 30. So that's probably why I'm going to stick to my micros. Thinking back on this, because I remember thinking, oh, okay, there's 4.5. What if we were to get 4.5? Okay, that's way too far away. But now we're at 4.65 at least. We are to a kind of a spot where, like, if they don't continue selling, it should pull back a decent amount. And I'm not really seeing that selling come in. I'm just seeing a steepener. Right? It's a very clear steepener. Buy the 5, sell the 30. It's just that I don't see anything in that news that suggests like a, well, actually I take that back. The news overall should be sell the treasuries. But in the yield curve, it should also be a steepener. So that we got a, so I should be buy the treasuries, but steepener, right? So that we got a sell the treasuries and a steepener. Maybe they just decided to take the trade with the yield curve and are kind of, you know, confusing us all with that when the play is really buy steepeners. Like, I think steepeners makes a lot of sense here. Chris, who's Chris? Chris thinks the opportunities to catch intraday alpha is now higher than ever due to price insensitive flows, generating mispricings that can be exploited. Yes and no. The amount of opportunity out there, absolutely, for sure. There is more of it than ever before. Like, markets are less efficient than they were. The question is, will you be able to take advantage of those mispricings? That's kind of the difficult part. Right now, with the information that we've had through a large portion of this year in the treasuries at the very least, it's been really difficult. It's been really difficult. It's been like pulling teeth, I feel like, for me. You know, you really want, like, the best thing for us would be a situation where there's a piece of information that we know and it has a really strong long-term impact on it, and we can just continue to take advantage of that thing. And we had some times like that last year. I think that you kind of had a situation like that at the beginning of the year, but I misunderstood it when it was happening, so I didn't catch that one. But then since that time, it's kind of been a mess in the treasury. USD JPY uptrend could be carry trades. Yeah, I'm never just going to completely agree. Well, but I have to, like, kind of put that caveat in there, right? Like, I think his point is really the market is less efficient. That's correct. But has our ability to predict flows increased? It hasn't for me. And when it starts doing this kind of stuff, that's kind of like, I think, a little warning. Because this is usually the time where, like, I want to start getting more aggressive, right? And then the market starts doing weird, confusing things. So this kind of looks like the kind of market that starts stopping a lot of accounts out, right? This, all of a sudden, we've moved into an account killer market. Which is usually like I wish that I had just sat on my hands the whole time through that and waited until afterwards, because then some of the best opportunities come afterward, right? That's kind of how I'm feeling right now. But that's not any kind of empirical. That's just kind of probably really Seth's trauma more than anything talking there, right? So, yes, I do have a tendency to just be, you know, difficult and disagreeable. But in that instance, it's because I don't feel like that piece of analysis really explains how it's relevant to us. Right? Oh, so I need to keep an eye out here too, because I only got 15 minutes left. Man, so how if we had traded against that? Well, you know, I don't think that this area would have made. So let's say this 4.417, or let's say 442, and now we're at 447. So you could have made $50 on this reversal. Yeah, these days I only trade in ZN. Well, I will place sim trades in ZN, and I'll place live trades in the micro tenure. I like to keep my risk super, super tiny. You know, I do have some evidence, like from my sim trade performance and everything, to suggest that if I really upped my size and everything, that I'd do pretty well. But I just really don't feel compelled to take that risk right now. So I can keep it to teeny little trades in the micros. And, you know, that was the right thing to do today. I was like, well, let's take some sim trades and see how I do first. And I think that I had a pretty good handle on how this was going to move overall today. Just, I missed one big one, which was that the meta order would continue selling even after the news. Okay. It was something I knew a possibility. I kind of took a gamble on it with the sim. It didn't work out. But in terms of like finding the right spots and getting a good spot and everything, I was absolutely terrible today. So that's kind of like I don't feel like I'm very well in line with the market and that I shouldn't take much risk. Bids are stacking at 06? Well, there are these prices right here. Is that what you're talking about? That. I don't know. On the bigger picture? Cumulative delta is reversing back through. It's like they didn't really want to go along with this. There wasn't very active selling in the 10-year on this move. But you are going to see net selling because it moved, and now those guys are just all taking profits or something. So they're not completely done yet. But so that is a change in cumulative delta, but I think that that's kind of like we're in the post-meta order impact zone. This is what that looks like to me. Still watching the Japanese yen here, like, there could be some intervention. There really could be. Gold did not like that. Gold fought it harder than the others, though. Did I not roll over Bitcoin? Shouldn't the Bitcoin be rolled over? Okay, maybe not. Maybe it is 07. You know, one of the things was like on Friday, you know, the news and Zero Hedge and everything that I read, they didn't really have a very good explanation for why it had sold so hard either. So we may just have to wait a little bit longer. It might be later in the week before we find out what actually, you know, they're still executing, so they're not going to tell us until they're done, right? Let's see here. Oh, okay. So now Zero Hedge has the story that Biden's family urges him to fight on. This is curious. Okay, so like the overall media is reporting that the family has encouraged him to keep going with it. But Bill O'Reilly claims that they've already decided that he will pull out and they're just figuring out how to do it. Who do you think will replace Biden with? Oh man, I don't know how this it's so hard, I think, to game out what this is gonna go. So if you go to predict it and you look at their let's see here, markets, Democrat nominee, presidential election winner. Okay. And we look at the trade here. Oh, okay. Harris moved up. Shouldn't we have Newsom on here as well? Okay, so Newsom saw the biggest rise after that, but he has kind of since faded a little bit. Granted, predicted markets aren't very thick or anything, so we gotta be careful about reading too much into it. But it seems to me that the conventional wisdom is that Newsom is the most likely candidate because he has kind of been running like a shadow campaign. So that's my best guess. But I also think that a lot of it is really going to depend on like what the process ends up being and everything, right? So Biden drops out and releases his delegates. Does it really all come down to backroom dealings? I don't know. Or will there be more votes or something? You know, I just...
Block cell.
The whole thing is a mess. But it just going back to what I had said earlier, it may just be the case that at this point Donald Trump is going to win and there's nothing they can do to stop it. Like, Biden can't beat him. None of the other challengers can beat him. Donald Trump will be the next president. And if that's the case, then the smart thing for the Democrat Party to do is to look past that and try to fix their party up for afterwards, right? Prepare yourself for the Trump win, and trying to keep propping up Biden, I think would really, really hurt the Democrat Party in the long term. So it's probably in their best interest to try and replace him. I don't think that the best thing for them would be to try and replace him with Newsom or well, let's put RFK Jr. on there because he was the only other guy running, right? But I think that he's kind of a kook, so I don't think that he would help him. And some people have mentioned Clinton. That would be really, really bad if they just tried to put Clinton in there, right? But if you could get somebody further down the list, like Buttigieg, maybe. Buttigieg is probably the best one on that list, but I don't think that would be a very good pick. And what's her name? Let's see here. That's the presidential election. Here's the Democrat nomination. Michelle Obama, I think, is a real possibility. I was thinking about that lady that's kind of more of a war hawk. What's her name that Republicans like? If they picked her, that would probably be pretty good in terms of what I'm talking about. But I don't know. Like, think back to when Barack Obama became president, right? Like, nobody knew who he was. Nobody knew who he was. And his profile raised because of running. If we were to go through a real primary process, you might see somebody rise to the top that's not on our radar at all. Yeah, Nikki. No, Nikki Haley? No, that's not her. Anyways. So, you know, the for the Democrat, here's the thing. I might sound a little bit sad about it. I believe that the country is better off when both parties are doing their best. The thing that bothers me the most, and I would say this is going back to pretty much when Barack Obama got elected. So I feel like that ever since Barack Obama was elected, that he's weakened the Democrat Party, and the Democrat Party hasn't been a very good party. They're not serving their constituency very well. And so I feel that the country is weaker because of that. Like, I don't want there to be a situation where one party is very clearly dominating the other. I don't like that. And what's going on right now with Joe Biden is not good for the country. It's not good for the country. That doesn't mean that I have some huge problem with Donald Trump getting elected. Like, he wasn't my first pick, but I am a Republican. I'm gonna vote for him. I don't think that it's gonna be nearly as bad as some people are trying to make it out to be, right? But it's a bad situation that's gonna take many years to fix itself, I think. Like this is basically gonna be the Democrat Party has to completely rebuild itself. That's not a good thing for the country. So who will they replace him with? I can only guess. My guess is Gavin Newsom. When it happens, it's probably going to be like, of course, this is always the way that it was gonna come down. But still, that's why I guess part of what I'm doing here is I'm saying, you know, I'm not really sure what they're going to do, but I can tell you what they should do. And what they should do, the best thing for the Democrat Party and for the country as a whole, is for Joe Biden to drop out. We deal with the fallout afterwards. Like, he drops out, then kind of the ground rules get set. Then we all figure out, okay, so does this all have to be figured out at convention? How is this going to work? Who really wants it? Then we can look at the choices and maybe we can make a better educated guess, right? Okay, well, we are pushing down a little bit more again. It looks like we're getting another leg of this. How far do you think that they can go today? I do kind of, so this is one of those situations where like, you know, like we knew that there was a strong possibility of a sell trend in CN and that possibly Japan. Let's add in here or bet on Trump presidency. Okay. I think that there's a different day where maybe I'd be in a different place and so forth, and I would have said I think that they're going to ignore the news and keep selling, and I don't know why I didn't do that here in this situation. This is kind of where there's that X factor that I can't, you know, really. Maybe you got it and I didn't, but there was certainly a point at which I probably should have turned, you know, when I exited that trade, I should have turned around and just gone short. I don't know why I didn't. That's another thing. I guess I'm still being really cautious. Yeah, well, it looks like they're doing the meta order thing. So this leg won't be as long, but it looks like that they're trying to find another spot. It might be around this 03. But it will be important for us to see how far it gets, right? How big that meta order is, how far does it get, where are we at? Because, I mean, good grief. If they get below 108.31, that's kind of like mean reversion zone. So let's just say 109 even. 109 even is kind of like the next key target. At that point, you will see a lot of both momentum and mean reversion come into play. This ATR stop is a key, like, mean reversion kind of spot. Like you can see right here where it kind of crossed it and then, oh, actually, we're going to go up. Right? But then they never closed above that, so it didn't mean revert. Just... And the moving averages, you know, are a little bit wonky. So I might be a day or two before the moving averages are all in the place where the momentum traders can, like, are free to go short, right? Well, we got a lot of economic data to be released this week. Today, it didn't matter. Maybe,
Block
you know, and I wouldn't be surprised to see this meta order last another 2 days. But I don't think that they're going to be there after non-farms. So non-farms come along, and I think that non-farms will be weak too. And then maybe you'll start to see the Treasury start buying again. Because ultimately, I still think that Federal Reserve is going to cut rates soon. Like frankly, I think that they probably should have cut in the last meeting. But the data that we get is too lagged. So they'll do it in August or whatever. September. But we'll see. It's time for me to get going, guys. I will see you tomorrow. Stay excellent.